Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Asia podcast. I'm Doug Krisner. You can join Brian Curtis and myself for the stories making news and moving markets in the APAC region. You can subscribe to the show anywhere you get your podcast and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.
The White House is fighting Parkinson rumors today, and the president is still standing very defiant. Want to get into both of those things at least. White House, the battle today, questions about why a neurologist has been visiting at the White House. Joining us is Bloomberg White House reporter Josh Wingrove, who's covered the story, and he has the write-up on the Bloomberg Terminal. Josh, thanks so much. The report is that this neurologist is a Parkinson's specialist. What do we know?
Yeah, this is circulated from several outlets, and the question is basically, why was this doctor at the White House? Now, the visitor logs, I should mention, have, tens or hundreds of thousands of entries. All kinds of people come to the White House. It's not reliable in terms of listing who they meet with. But what jumped out today is the White House just simply would not say whether this doctor ever met with either President Biden's doctor or President Biden himself, and so it's sort of left us with more questions than we began with. But just at 30,000 feet, Biden is sort of digging in. He is telling his own party to sort of, shut up and get in line because he's going to be the nominee. And for many of them, frankly, that's been working. They're saying this is the reality. There's not really a mechanism to force him out if he's dead set on going. And, of course, he's declining to respond to suggestions or calls for, other medical testing since that debate. Just give him a clean bill of health. So that's where we're at on this one right now. Yeah,
and I'm going to get to his being defiant in just a second, and we're going to get there. But the gist is that Karine Jean-Pierre saying that he has had these, as a matter of fact, the latest in February, and read from part of it as part of his routine physicals. So just dismissing it, right?
Yeah, these are the annual physicals that he has, and they do sort of preliminary screenings for neurological disorders, including Parkinson's, sort of preliminary thing. And his most recent one from whatever that would be 5 months ago now said that there was no indication of fear. Of course, the worry is that for a lot of Democrats, President Biden has noticeably slowed or had more verbal fumbles in the months since that physical. And so we asked today, is there another physical that's going to be coming? And they said not this year. So the White House's position is the president doesn't need to be examined or have another full physical before the election.
Yeah. Now, you mentioned the president remaining defiant today. This is in the face of some stories that we're running, some very influential donors saying that he should step aside, but basically he's just pushing back on them as well.
Biden earlier today began the day by saying, look, I don't care what millionaires think. And then, 3 hours later, he was in a call with donors, which speaks to the potential risk, right, if big money donations dry up for him. But, it was really a defiant day across the board for him, both with donors and with House members, kicking off the day with a letter to them. He hasn't called the vast majority of Democratic legislators, saying basically, I'm not stepping down. I'm not getting out of this. Get behind me. The more we quibble about this, the worse it gets. But we've seen this steady drumbeat of Democrats offering either very tepid statements, some supportive statements for sure, but others saying flat out that they don't think Biden should be the nominee. So it's a fluid situation right now. Biden, I think, is expressing optimism that they've sort of quelled the revolt, but it's unclear to me.
Yeah, but and just to make things a little more complicated, we're hearing the next few days will tell the tale. The next few days will tell the tale. NATO begins tomorrow. He's not going to pull out while those meetings are in progress, is he? Or am I just totally walking a different direction?
I mean, of course, yeah. And as of now, just to be clear, Biden has no intention of pulling out as the nominee, and certainly none of, resigning as the president. And it's not only NATO. He's announced he's going to Michigan, a key swing state, on Friday, and next week he's going to Texas and Nevada. Nevada, of course, another key swing state. He is proceeding full steam as if he is the nominee. There's no real sort of big marquee name Democrats yet that are really calling on him to step aside. In fact, some big names have come out in the last few hours saying they support him. One of them is Alexandria Ocasio-Cortez, a very prominent progressive, who said she spoke with Biden at length this weekend. Of course, we curious why they would be speaking so long. It sort of suggests that she was trying to relay something to him, but says that he's dead set on running and that the matter is settled. So I think if Biden gets more cases like that, he might come out of the woods. Of course, the risk is that he has another issue like this debate, another appearance, maybe even the press conference that he's got scheduled for Thursday at the end of that NATO summit goes badly and things could just flare up again. But right now it looks like he's trying to clamp down.
Looks like he's playing out the string. Now, just one more question about this, and not to overdo it, but maybe I've missed something. But if Hakeem Jeffries and Chuck Schumer came out and said, he's the man, get in line, wouldn't that end all of this?
It might. Both of them have come out with quasi-statements of support in the past handful of hours. They've been kind of silent before that. It's tough for them because their frontline members want to not really run so close to Biden. The people that will determine whether they either take the House or, in the case of the Senate, hold the Senate. And so it's a tougher calculus for them. I think you'd have to have just almost like across-the-board united phalanx of every big-name Democrat you've ever heard of coming out, arms linked, telling Joe Biden not to run again. A, there's absolutely no evidence that that's coming together right now. On the contrary, more of them are supporting them than not. And B, it's not clear that he would respond to them if they did.
All right, Josh, awesome information as always. Really appreciate it. Thank you so much. That is Bloomberg White House reporter, one of our White House reporters, Josh Wingrove.
We wanted to take a closer look at France and the aftermath of some pretty turbulent elections there. Joining us now is Jacob Kirkegaard, Senior Fellow at the Peterson Institute for International Economics. So, Jacob, looks like divided parliament here. Will we have stasis? Will we have gridlock?
I certainly think there is a possibility of gridlock, but I think the key message from this election was really that, certainly in financial terms, I would argue that the true tail risks, which would have been a potentially very confrontational right-wing government under Marine Le Pen or a fiscally extremely prolific left-wing government, has both been avoided. Instead, you have this, in French recent political history, unprecedented situation of, yes, a hung parliament, but nonetheless a parliament where, at least mathematically, there is a possibility for a centrist, the moderate left. The question will be really generate what is the norm in many European countries of sort of, parties coming together in compromises for majority coalitions. That is not, has typically not been necessary in France, and we will see whether in the coming weeks this is possible.
So let's begin here with the idea that Macron made this decision for a snap election after the elections for European Parliament. We can debate what his strategy may have been at the time. Do you think he succeeded in trying to avoid a cliff, if we can understand it in those terms, which is to say a lot more momentum being developed on the far right side? Did he avoid that? I mean, clearly, Le Pen's party did not get a majority. The polls that we had at the end of last week forecast that her party would have controlled the majority of the assembly. That did not happen. But did this necessarily, the entire shift that we're discussing here, did that need to happen?
Well, I think, if you look at the plausible alternative to calling this snap election, which would have been that the previous parliament would probably, over the course of 2024, have yielded a vote of no confidence against the government anyway, leading to a likely a new election in the fall or in the fourth quarter. And then coming out of the clear victory by Le Pen in the European elections, Macron basically decided clearly to gamble to try to blunt the political momentum of Marine Le Pen. And I think he succeeded in that. Alternatively, in my opinion, he would have risked becoming an outright lame duck and basically sort of had to continue for the remainder of his parliamentary or term in office with Marine Le Pen as the clear favorite for the presidency in 2027. I think also that is far less certain today. So while he certainly lost seats his party lost about 80 seats in the new parliament, but nonetheless, he has managed to blunt the political momentum of Marine Le Pen, and I think that was his primary motivation, and in that he succeeded.
Okay, I want to ask you a little bit of a out of left field question here. So it looks like in France you'll have probably some sort of combination of a moderate to left government here. There had been a lot of fears that this would, drift to the right. In the UK, you have the more liberal of the two major parties gaining power. Does that hold implications for the United States? I mean, does that bode well for perhaps the Democrats in the U.S. election?
Well, I mean, to the extent that type of political news travels across borders, I think it does. I mean, I think it does show that a sort of moderate leftist coalition or political agenda does have, even in today's day and age, does have resonance with voters in advanced democratic market economies, including, of course, both France, England, and the United States. But of course, again, each country's circumstances are different. But, if I was Joe Biden, I would be happier than if I was Donald Trump reading about the election results in both the UK and France.
One of the things that came up in our conversation the night that we were getting the early results from the parliamentary elections in the European Union was the issue of supporting war in Ukraine. And our guest at that time said, you really have to wait until the outcome of the French election to determine whether or not the EU is going to continue in this effort. Do you have a read on that? I mean, with the results that we're describing, will the European Union continue to do everything that it can to support Zelensky and his mission?
Yes, I think that one of the few unambiguous things you can actually say from this hung parliament is that it was very good news for Ukraine, because even a hung parliament, or at least a parliament in which President Macron, who is obviously has turned into one of the most hawkish European leaders on Ukraine, he will not, under any circumstances, be confronted with a sort of an antagonistic and somewhat, or at least far more pro-Russian parliamentary majority led by Marine Le Pen, which means that he, as president, is still going to be able to exercise his dominant leadership role on foreign affairs, including French support for Ukraine. And he's also likely, I certainly believe, to have a government or a parliament that will ultimately appropriate, either by presidential decree or by parliamentary majority, more French taxpayers' money for Ukraine. So if you combine that with, clearly the support also by the new Labour-led government in the UK, the government in Poland, the German government, etc. Yes, then absolutely, European support following the French election is probably more united behind continuing supporting Ukraine than at any moment since the war began.
Yeah. Well, back to the domestic story in France, just briefly, because we need to get a prime minister or premier. Is it the New Popular Front that would have the sort of early step in this? Would they put forward somebody, and how does that process play out?
Well, constitutionally, it's still the president. It's Macron who has the prerogative to nominate the prime minister. Then the new parliament can choose to reject that parliament, that prime minister by passing a vote of no confidence. But there's no doubt that the Popular Front on the left will try to sort of seize the political initiative by putting forward a candidate that they then would sort of try to impose on President Macron, but that he's under no political obligation to accept that candidate if that candidate is not to his political liking. Which may be the case if the candidate is from the sort of most leftist part of the Popular Front coalition. So there's going to be a political struggle to come up with the right candidate. But again, the key point is that so far what President Macron has done, he has rejected the offer to resign by the incumbent Prime Minister, Attal. He's asked him to stay in power for the duration of the Olympics and probably the summer.
All right, Jacob, thank you so much for joining us. Jacob Funk Kirkegaard, Senior Fellow at the Peterson Institute for International Economics, talking here about the French election. Well, joining us now on the program for a look at markets is Quincy Krosby, Chief Global Strategist at LPL Financial. Quincy, so as Doug highlighted, and we've talked about all morning, this week, Powell in Congress, the CPI report, and the start of the second quarter earnings period. Which one do you think will prove most impactful?
I think it's going to be the CPI followed by the PPI. Just as we heard, Powell is going to try to stay close as he can to lack of commitment towards a rate cut. That the House of Representatives are going to go after him. Many of the senators are going to go after him, basically begging for a rate cut, attempting to have him understand how many of their constituents are hurting with the higher interest rates and the ensuing late payments. The delinquencies are stacking up, and we'll hear that from the banks starting on Friday.
So do the data support the idea that we could get a rate cut as soon as September, in your view?
Yes. I mean, if it continues, we're seeing a slowdown in the economic landscape, now about 1.5% for the second quarter. This follows a weak first quarter. And we're also seeing the consumer more and more discerning. Granted, we do see people taking cruises, they're traveling, the airlines are doing really well. But what we're going to be looking for over the next couple of weeks and during the earnings season as well is whether or not we're hearing from companies, whether we're hearing from some of the data that we receive, is it just the lowest wage earner? Because what we're suggesting now is that it is moving up the wage scale. And that is where the concern comes in. Not that we don't care about the lowest wage earners, but if it starts crawling up the wage scale, you're looking at, the most important element in the economy, which is the consumer, becoming even more careful.
Yeah, and if you're the Fed, you don't exist in a vacuum. You have to live in the real world. You have an extremely debt-laden economy. The last thing you want or need is to see a sort of, turn, and all of a sudden you're losing jobs and you sort of bring deflation back into the picture. That would be a disaster. So you'd think that they would want to embrace the dual mandate and to be looking at both.
Well, Chairman Powell has been talking about maximum employment more and more. He's even gone as far as saying, if we expect and see deterioration in the labor market, we will go in and start to cut rates. For the market, when we look at it from the market's perspective, that's not what they want to see. They want to see rates coming down because inflation is coming down, and therefore it doesn't warrant the higher rates. But we look at all of the data. We see the 4.1% unemployment. We see the 2 months of downgrades. And also the ISM service sector going into contraction, manufacturing in contraction. You don't have to be a PhD economist to put this all together and say, it's cooling. Cooling does not mean collapsing. But the Fed is so worried, I think, because they made such a big mistake early on, with the supply chain, that they don't want to make a mistake now. But the worry is that they could if they don't move quickly enough.
You said cooling's not collapsing. Cutting 25 or 50 basis points is also not like caving, right?
Exactly. The ECB did it. They had inflation coming down, but not fast enough. They had some wage inflation that they had to deal with. But you saw in the minutes, their version of our minutes, the notes, they said it was prudent to do it. It was prudent to do it because you can't catch it necessarily quickly enough, introduce that medicine of a rate cut quickly enough. And they said that they're going to be obviously watching to see if inflation picks up again, but they felt that they had to do it. The Fed, I think, is so worried about this, that they're making a mistake, that they may wind up making a more serious mistake, especially if the employment landscape begins to deteriorate, as he said, at a faster clip.
So,
the
Quincy,
earnings season,
go
I'm
ahead.
Sorry.
Well, that's a great segue into earnings, because I want to talk about risk assets next. Given everything that you just laid out, how do you view the environment for risk assets?
It's still, obviously, price action tells us it's still very good. We always have to focus on price action. It's still good. But what's interesting, though, is the role that the mega tech actually play. That when you start getting worried about the economy, you get worried about what's going on in Europe. Is Asia slowing? Is China still slowing? Where do you want to be? You want to be in those very names. So you see a migration back into the mega tech names simply because they have very strong balance sheets. Their margins are attractive. They don't have debt. They have all the things you want during a difficult period. The only thing that you don't want are those heavy valuations. And so that's what we've seen over and over again. Every time there's been a threat that a recession is coming, money goes right to those names again.
The equity market has had this kind of extraordinary ability to keep its head above water here. You'll get a couple of days where you've got a sell-off in NVIDIA and some of the AI players, but then on the same day, you'll have Apple and Amazon up, and a day like today, NVIDIA recovered and Apple was up, but then you had Google, Meta, and also Microsoft down. It's almost as though like there's a puppet master up there kind of pulling the strings.
No, that's absolutely true. A couple of months ago, we thought we were going to have a pullback. The market was overbought. It was staying overbought. And we thought we'll have a pullback. And it was healthy. We wanted a pullback. Lo and behold, NVIDIA comes out with a comment, no pullback. In fact, the market moves higher with the mega tech names. It is fairly astounding. But the fact of the matter is, when we look at something more basic, we look at the consumer staples and we look at consumer discretionary. Consumer discretionary is still holding up versus consumer staples. So if we see a shift there, moving over to consumer staples, it is telling, that's what the market telling us, consumers are pulling away from discretionary items. And I know that you could say that Tesla is in that group, but we tend to pull that out and look at the rest of consumer discretionaries. They are still holding up. So right now, the verdict is still, a cooling economy. Mm-hmm. But
I'm sorry there. I was acknowledging in the affirmative. I agree with you. And one of the other things that we want to get in before we let you go here is the earnings. Delta Airlines, Pepsi Thursday, but the big numbers happen on Friday with the banks. We've got Citigroup in there, JP Morgan, Wells Fargo. I even think Bank of New York will report. How do you view the financials in the current environment that we're talking about?
They're doing well. In fact, the big banks, the big money center banks, are going to have a nice tailwind from investment banking. Deals are starting to pick up. Granted, it's not, the boom days. It's not gangbusters, but it is starting to pick up, and they're going to find that's going to help them. And also, the fact of the matter is loans are still attractive. The credit market, that's something we watch assiduously, is still holding up, except we're starting to see weakness at the very lower end. The spreads are widening. So we want to have them talk about that and whether or not the credit card payments are being made. Is it getting worse? And again, as I said, what are they seeing above the lowest wage earners? Because they have credit cards that cover it. But I want to add one more.
Yeah, sure, quickly.
Because the banks are coming out. We like industrials. Pay attention to Fastenal. FAST. That's the ticker. Why? Because they are a industrial distributor across the country. They are very close to the regions. They're close to the ground. And we want to hear what they have to say. They trade on NASDAQ. We will be watching them along with the big banks, but they'll tell us a story about our economy.
Yeah. All right, Quincy. Good advice there. Fastenal, we'll keep an eye on it. Quincy Krosby, Chief Global Strategist at LPL Financial. Anna Rathbun, CIO at CBIZ Investment Advisory Services. Anna, we're coming into earnings season, and you've got analyst upgrades on profit outnumbering downgrades. But at the same time, you've got forward, say, 12-month earnings estimates at an all-time high. And that's coming at a time when it looks like the economy is slowing. Does the bond market look more attractive now than the stock market?
Good evening. Thanks for having me. I feel like the bond market and stock market have different things to worry about. Starting with the stock market, we are not just priced for perfection here. We're priced for outperforming perfection. And on top of that, as you mentioned, the expectations keep going up. I do think that the market is probably ripe for some kind of a downturn. And so from that perspective, maybe bonds are more attractive. If you look at some Treasury yield action, definitely from last week, there was a response to some of the weaker underpinnings of the labor market on Friday. Despite the fact that the headline said 206,000 jobs gained, the 10-year actually fell. So I do think that there's room for the Treasury market to actually react to some of the softer economic data that we do anticipate will continue. So if we're looking at bonds versus stocks, I do think that there's room for stocks to gain and certainly room for, bonds to gain and for certainly room for stocks to correct.
So you're talking about the reaction to the bond market. I'm more curious about the reaction function on the part of the Fed. I mean, when do we get the first rate cut?
So we'll see what he says tomorrow, Mr. Powell. I mean, that testimony is going to be sliced and diced like the meeting minutes were. But I think there's a lot of anticipation for tomorrow, especially because in the meeting minutes, it was pretty clear that we're sort of coming off of the worries about inflation. There is definitely some confirmation of belief that disinflationary forces will continue. And so now we're paying attention to the labor market. And then boom, on Friday, we got a labor market that was softer than expected. So we'll see what he says tomorrow. If he is dovish, we have always been one cut in December. I think depending on how he addresses Congress tomorrow and Wednesday, we may be looking at a second cut.
So you're looking for a correction, and I wonder whether or not, during that correction, you might see a little bit of weakness or at least a little bit of a warning or a slowdown for NVIDIA and some of the AI players. And if you got those things together, could it go further than, say, a roughly 10% correction?
Certainly the narrow leadership in the marketplace, that's definitely possible. I mean, if we're talking about a technical definition of a correction, 10%, it certainly could be bigger. We're talking about NVIDIA and certainly Max 7. And if you think about it, they're all sort of codependent on one another. The other Max 7s that are sort of incubating the AI programs that are not yet cash positive, they're relying on NVIDIA, and NVIDIA is relying on them. So if there's softness in any one of them relating to the AI narrative, I think you can see a pretty big action there. But I will say that I don't think everything is about AI, about the big tech companies. If you think about it, they do have a lot of cash. They do have a lot of earnings. They have pretty safe balance sheets. So a lot of capital chasing these names, I think part of it is just chasing quality, chasing better balance sheets. Never mind that there is risk of these codependency and certainly the AI hype. So I think there's a little bit of a mixed story there. So that would be one scenario in which the downside may not be as big as we might expect.
To what degree is there the risk of market volatility as the result of the November election? I mean, this is kind of stunning what we're dealing with just in the news cycle lately. And it's kind of surprising that the market is holding up, in a pretty stable fashion. Is there some point at which this turns into a case of greater volatility?
Normally, I don't really expect to see the markets react to any kind of election uncertainty until the fall. So I'm sort of waiting until after Labor Day. Now, if we do have a Fed cut in September, that might be different news. And there's a lot of moving parts there. But I think that the markets, Treasury markets included, they're sort of looking for, will there be a sweep by one party. It's not just about Joe Biden versus any other candidate. We still have a little bit of time for that. I think we have at least a month, right? But if the voters lose such confidence that there is a one-party sweep, let's say a Republican Party sweep, it's not so much about the Republican Party, but it's that one party can actually pass something that could be detrimental to the current crisis in the deficit profile and the debt profile of the United States. And I think the markets will react to a one-party sweep rather than who becomes president.
Anna, this program is about Asia, and we often talk about the sort of intersection with the close on Wall Street and the opening of markets here, and then we phase into, more distinct coverage of Asia. We do have some big things coming up. We've got the third plenum in China, and also we're looking at a situation in Japan where, you're also facing some change. Do either of those markets interest you at this juncture?
We have been a bit dovish on China. Dovish not in the Fed sense, but softer on China in terms of outlook. And we have been underweight. And a huge part of it is that I don't think the real estate debacle, that's not the best choice of words, is over. And we are afraid of some of the intervention by the government. And so we're a little bit softer on China. On Japan, we have been relatively bullish. The only issue is the currency, right? The weakness in currency tells us something.
Yeah. All right, Anna, thank you for joining us. Anna Rathbun, CIO at CBIZ Investment Advisory Services.
This has been the Bloomberg Daybreak Asia podcast, bringing you the stories making news and moving markets in the Asia Pacific. Visit the Bloomberg Podcast channel on YouTube to get more episodes of this and other shows from Bloomberg. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.